Have you ever wondered what it's really like to manage a stock portfolio? Not just in theory, but, with real market ups and downs on the line? Well, today we're going to dive into a pretty fascinating experiment where a team of university students was put to the ultimate test. So this is the big question, right? We're going to follow the journey of Group 2 from the Islamic Science University of Malaysia, who took on this exact challenge. And let me tell you, they weren't just playing a game. They were navigating the real market, and their experience is packed with lessons for every single one of us. Okay, so the whole thing took place in what's called the Bursa Marketplace investment game. Honestly, the best way to think about this is like a flight simulator for investors. It's a totally safe space to learn the ropes, apply all that classroom theory, and make decisions without the risk of losing any actual money. It's all about getting that practical experience. Now, what's really interesting here is their game plan. Look at objective number 1. Before they even thought about profits, their main goal was to preserve their capital. They weren't trying to get rich quick or swing for the fences. They were aiming for steady, sustainable gains, sticking to their principles by only choosing Sharia-compliant stocks and trying to minimize risk. This whole thing was a lesson in discipline right from day one. A plan like that needs a solid strategy, of course. These students didn't just throw darts at a board. Nope, they combined 2 classic methods of stock analysis to guide every single decision they made. Let's break down how this 2-pronged approach actually worked. So, first up, you've got fundamental analysis. And I love this analogy of detective work, because that's exactly what it is. You're digging into a company's financials, its leadership, its place in the market, all to answer the big question, what is a good company to buy for the long haul? And here you can see that detective work in action. For value, they looked at companies like Telecom Malaysia and MBM Resources because they had low price-to-earnings ratios, basically a sign that the stock might be a bargain. And for income, they picked a company like Enterprise Plantations because it had a huge 9.95% dividend yield. This wasn't guesswork, this was strategy. But look, knowing what to buy is only half the battle. Their second prong was technical analysis. So if fundamental analysis is the detective, technical analysis is kind of like the weather forecaster. It's all about looking at charts and data to predict short-term price moves and answer that other crucial question, when is the right moment to get in or get out? Just take a look at this chart for press metal aluminum. The students weren't just guessing here. You can see they used the moving average, that's the blue line, to confirm the stock was in a healthy uptrend. They also checked the Relative Strength Index, or RSI, down at the bottom to make sure the buying momentum was strong. This is exactly how they pinpointed their entry. All right, so they had their objectives, they had their 2-pronged strategy. Now let's see how it all played out when they actually started making trades. This is where theory meets reality, and we get to see a clear win and, well, a necessary setback. Let's go back to that press metal trade for a second. It was a textbook execution of their strategy. They saw the strong uptrend, they bought 100 units at RM 6.44, and as the price kept climbing, they even bought another 100 units. The result? A nice, clean profit of RM 129. A perfect example of their plan working exactly like it was supposed to. But you and I both know that investing is never just about the wins. Take MBM Resources. They bought in at RM 5.43, probably seeing signs of a good recovery. But the market had other ideas. When the trend suddenly reversed and the stock started to fall, they didn't wait around. They sold at RM 5.02, taking their biggest single loss of the whole project. And this quote from their final report, it's so important. They didn't see that loss as a failure, they saw it as a strategic decision. Executing this cut loss allowed our group to manage risk. This is the kind of discipline that separates amateurs from serious investors. Cutting a small loss stops it from turning into a disaster, and it frees up your money for better opportunities. So they had some wins, they had some losses, and they stuck to their plan for 2 whole months. And that brings us to the moment of truth. After all that analysis and teamwork and discipline, what did their final portfolio actually look like? Let's just ask it plainly. With 100,000 ringgit to play with, did they end up making a massive fortune? Did they find some hidden gem and just blow everyone away? 35 ringgit. That was their grand total profit. I'm just gonna let that sink in for a second. 35. After 2 months of work, you might be thinking, wow, that's it? But that number is actually the most important number in this entire story. Because what that RM35 profit really means is that their portfolio was worth $100,035. They did it. They succeeded at their number 1 objective, They preserved their capital. In a choppy market, just not losing money is a huge win, especially when you're just starting out. They proved their risk management strategy actually worked. And the financial result wasn't even the biggest win here. This quote from their report tells you the real outcome. Every single decision, it was made through discussion, through mutual agreement. The real profit wasn't the money. It was learning how to collaborate and make smart decisions as a team. That's a skill that's going to pay off for the rest of their lives. So, as we wrap up this incredible learning journey, let's just boil it all down. What are the key lessons that any of us can take away from their experience, whether we're investing or just tackling a big project? Well, for starters, success isn't always about the biggest profit. Sometimes it's just about protecting what you have. A clear strategy, using both fundamental and technical analysis, is absolutely crucial. And discipline? It's everything. You've got to cut your losses quickly. Teamwork leads to better decisions, period. And at the end of the day, you can read all the books you want, but nothing, and I mean nothing, beats hands-on experience. This team started with a virtual 100 grand and ended with a massive wealth of real-world knowledge. They learned that sometimes the process is way more valuable than the profit. So I'll leave you with this. Looking at their journey, from the strategy they built to that final RM35 gain, what's the biggest lesson that you're taking away from all this?